Price action is undoubtedly one of the most essential aspects of trading if you're focused solely or even partly on technical analysis. And in this video, I'm going to show you exactly how I use price action in 4 setups and strategies. Now, having a deep and solid understanding of price action will help you make better trading decisions and decisions that'll help you more accurately and even decisively predict the stock's trend, whether price will likely fall or trend high above a key level. It can also help traders better understand whether a stock is likely to continue gaining momentum or to lose momentum. And that's why discretionary traders at the firm focus so much on price action and reading level 2, also known as the tape. And that's also why you'll often hear me and other traders saying that price action is king. All right, so you might also be wondering now about moving averages or Fibonacci, RSI, stochastics, or any other fancy indicator, and that's valid. But I and many other consistent and elite traders won't solely trade off these indicators. Why? Because they're lagging. Moving averages like the popular 200-day, 20-day, 10-day SMA, they're based on prior price action that obviously can't predict future price movements. If you have any indicator that can, I'm all ears. But that's where price action comes in. Where trading gets powerful is when moving averages align with current price action to result in an explosive move. All right, price action can confirm the trend or counter trend, resulting in an explosive momentum move, and that's what we want as traders, obviously. And I'm going to share 4 examples of how I lean on price action to make specific trading decisions. All right, starting off with mean reversion, and the setup in short, it is where price will extend rapidly from its mean, so its average, in a short period of time. It can be intraday or it could be on a higher time frame of the daily. It could also look like on the daily time frame where price will extend significantly from its short to mid and higher time frame SMAs. Intraday, it could look like a capitulation to the upside where the stock will trade an ATR or multiple ATRs in a short period of time before failing to follow through and then experiencing a significant reversal to the downside. To look at a recent example, we can look at silver. On the left, we have the daily chart. On the right, we have intraday. This intraday chart is on this day on the daily chart. And you'll notice that on the daily chart, this move to the upside, where we got its first mean reversion set up in SLV before continued to the upside for a week, and we got the second mean reversion opportunity just last week, Friday. You'll notice that in the pre-market, we had an extreme capitulatory move on Thursday in the pre-market where price almost achieved 47 on the daily chart. If it happened during regular hours, that would be up here. That would have been a multiple ATR move from the previous day's close to the upside. That all took place in the pre-market where we had a sustainable up move, and then we saw what looked like a few positions getting blown out on the short side, a bit of chasing FOMO on the long side, and a complete exhaustion and capitulatory move to the upside, thereafter failing to follow through before a significant crack off of the open. So what this represents is not only on the daily chart an out of character move to the upside with volume expanding and range expanding significantly out of character for SLV, but in the pre-market as well, an out of character move in the pre-market with that action, and really a classic blow-off move to the upside. And again, out of character for silver. So thereafter, the big point here is we need price. All right, basing this all around price action, we need price to confirm weakness and we need a change of character. And that's the big takeaway here. How will I use price action to confirm an intraday reversion opportunity? All right, so first, we obviously see some failure to follow through to the upside after silver makes a significant capitulatory move to the upside in the pre-market. We failed to follow through on multiple attempts, slight bull trap before the open, and then right off the open, we see a huge crack, and then price fails to reclaim any significant key levels, and we hold weak really for the first couple of hours off the open. All right, so that's price confirming and telling us that sellers remain firmly in control, and that was confirmed all morning with SLV failing to reclaim VWAP after blowing out shorts in the pre-market with this out of character move. All right, so that's price action again, confirming a change in the tape, confirming that sellers are taking firm control, and day over day, a significant change of character. All right, now the ideal entry for the intraday mean reversion opportunity. All right, that's when SLV broke its consolidation on rising volume when we broke this consolidation, we took out the low of day. All right, that is confirming the intraday momentum shift. That's after price action had remained weak all morning. So that is how I'll use price action for an entry in an intraday reversion opportunity. Again, we had a blow off opportunity, an out of character multi ATR move to the upside in the pre-market, a big exhaustion candle. We then had failure to follow through. We had a huge crack off the open. And then for over an hour, we had sideways action with price on multiple attempts and the stock trying to reclaim VWAP, shifting for buyers to be in control, failing. Sellers remained present, overhead resistance remained at large, and finally we took out the low of day, trend confirmation to the downside at that point, and price action had confirmed weakness in the stock, in the tape, and we had beautiful continuation to the downside. So ideal entry point would be in a entry at the low of day, break of that consolidation with the bouncy ball setting up beautifully mid-morning, and that is price confirming and price action presenting a wonderful opportunity for this intraday mean reversion opportunity. Next up, shifting momentum. So how can price action be used to identify shifting momentum, opportunistic times, ready to either trim along, close long, or even flip short? We can look at open as an example. It's a trade idea I shared in real time in IA ahead of time. This is break of support, a critical inflection point. Other examples for shifting momentum, you could get a trend break, you could get a severe capitulatory type move to the upside or downside, you could get consecutive lower highs. But for this example, we'll just look at a significant range that was developed at the high end of the multi-month run-up, and a break of support which signals shifting momentum. So again, it's been on a real tear, experienced amazing volume and momentum to the upside over several months, and after breaking out in volume and price and range on 9/11, it tested the 1050 area resistance several times, up to 6 times. The more fresh longs that have been trapped and enter, people buying the stock at these prices where risk completely at current prices outweighs the potential reward, considering again where the stock has just ran from, and equally with volume churning in that range at the 52-week highs with a very clear level of support. You have to be thinking and imagining that those late to the game, those longs that are buying the stock 1050, looking for a further run up, those are weak hands, and they might all look to exit at what point? They might all look to exit at the exact same price if we break below support 880s, just using simple technical analysis, and therefore it establishes itself really as a fantastic momentum shift entry point for a fresh short or spot to exit or trim your long, in my case for a fresh short position. All right, so that is essentially one way in which you could look for shifting momentum if you're able to identify the variables already discussed. And again, this is one example. You could also look for lower highs as we got thereafter, as we came back and tested resistance and overhead supply after we got the steady retracement after we broke below critical support. You could also look for trend line breaks. You could look for capitulatory type moves to the upside or downside, as already mentioned. Next up is VWAP, so specifically trending above or below with price confirming it. So VWAP's another way that I gauge price action intraday and really ensure that I remain on the same side as the trend, right? Remember, the trend is your friend, and if a stock is firmly holding above its VWAP, making higher lows, higher highs, and not extending significantly above its VWAP, but rather just surfing above it, as we can see in this example right here, pulling back, higher high, higher lows, surfing right above its VWAP, higher highs, higher lows. That is what is indicative of strong and I would say sustainable price action, and it's ideal for momentum trading intraday. All right, that price action is ideal for it. Now you combine that with a symbol like LAES that we have here that's in play, trading elevated RVOL. It has a fresh catalyst. On the daily chart, it's breaking out. If you'd like to go back and look at the daily chart, it's part of the quantum theme, really the hottest theme at the time in the market. And you have then the recipe and the makings for a very powerful potential intraday trader. So let's look at an actual trade example here. So with LAES, it's a trade that I reviewed in detail with my Inside Access members. It's a trade I took intraday. I held overnight for a swing. And how did I trade it? And how did I use price action and VWAP to help me trade the symbol? After the open, we were consolidating in a tight range, just dancing around VWAP, 50-50, no clear winner between longs and shorts. But as soon as we broke above pre-market resistance and the morning's range, and we pushed above VWAP, at that point in time, price was telling me that buyers were beginning to take charge. Now I need to look for an ideal entry point, and that is where I use VWAP, and VWAP comes into play. We pull back into the volume weighted average price. We confirm a higher low against the morning low. We're not significantly extended above VWAP, rather we're pulling in and we're beginning to surf above it. And then we confirm a higher low when we break this bull flag resistance. That's where I enter. Where am I wrong? I'm wrong if we break below VWAP. That is where my stop goes. If we break below VWAP, that tells me that price action is shifting to favor the shorts, to favor sellers. Sellers are taking control if we're not able to hold above VWAP and maintain this bullish trend. All right, so every time thereafter that price extended significantly from VWAP is where I began trimming my positions significantly. Every time we pulled into VWAP and surfed above it and maintained a higher low, that's where I would look to add to my position. When we made a higher high and extended from the volume weighted average price intraday is where I looked to trim my position until eventually the following day where I completely exited my position on a further extension in the morning. All right, and lastly, and what's been one of the most powerful setups in recent months is the consolidation breakout pattern. All right, so how does price action work alongside key moving averages, technical analysis to confirm a specific setup or breakout? Now, price action and moving averages, and my IA members will know this very well, is that I love going long leading names within leading sectors and themes, but especially only after they consolidate, all right, near or pull back to key rising moving averages like the 5-day, like the 10, 20-day, 50-day, all right, but they need to remain above higher time frame moving averages like the 200-day, 100-day, because that will confirm obviously that a higher time frame trend remains intact, and importantly, as long as they're not significantly extended from those medium to higher time frame moving averages, will I still look for a long. Okay, so in short, that's the setup. But how can I use price action? That's the key takeaway is how do we use price action to confirm a breakout? What do I look for? All right, so let's look at RGTI, which is on the screen right now, a quantum theme name as this example. So on a higher time frame, which we're looking at here, daily, we can even go to a weekly. We know RGTI has been leading in the quantum theme. It's had phenomenal momentum after breaking out above the all-important 21 breakout point, and for several months now, really, it's just been making continuous new 52-week highs. But once we broke out above that 21 important area, we had a significant momentum to the upside, which is what I like to see. You want to be involved in stocks that are making beautiful trending up moves. If you're looking for a long, then we had a nice pullback into the 10-day and surfed the 10-day, pulled into the 5-day, had a bit of a contraction within price and volume, with volume dying down as that range contracted, setting up very key and clean resistance near 31 and support near 28. That's what you want, well-defined levels to risk against and to identify across multiple time frames for a breakout. All right, this resistance and support shine through across an hourly, 15, 30-minute down to a 5-minute, 1-minute chart. All right, so intraday, we now know from a higher time frame, we know that intraday, the 31 level is the all-important breakout point. All right, so let's take it a step further, go to intraday and see how we actually will use price action to confirm a breakout. Let's see what happened. So in order for a breakout, in order for price to confirm it, I need to see price push above and hold above the all-important 31 level. Now this line is drawn from the daily and it shines beautifully across multiple time frames all the way down to a 1 minute. So I need to see price blow through this level on increasing volume. That will be confirmation. So let's see what happens. So initially the stock pushed into that level off the open, but it failed to hold above it. Instead, we saw volume die down. We saw price pull back into VWAP, and it consolidated in a very tight range. It's exactly what you want to see. It's a battle between longs and shorts. Now, of course, there's only going to be one winner. The stock's not going to just trade in a consolidation all day long. There's only going to be one winner. And when volume dies down so dramatically near an all-important inflection point, 31, the outcome will be immense and equally dramatic, especially in a name that is so in play in such a leading hot sector, right? So then volume comes in. If you're watching the tape, level 2, the offers got taken out immensely and price breaks above that morning high, and we break above the all-important 31 level. Now, not only when we broke above the high of day in that all-important 31 level across multiple time frames that it shines through, not only was that an exceptional entry that came from a high time frame setup, but you had price confirming it in a really, really solid fashion after the tight consolidation and taking out the high of day. All right, so notice thereafter, after that breakout point above 31, providing the really ideal entry, we held firmly above VWAP right here. We pulled in, we surfed above it, we confirmed the higher low, we took out the high of day yet again, and we really started to, on increasing volume, remain in a steady uptrend, showing you that buyers were firmly in control. Demand firmly outweighed supply on the day, and it was a absolute key and A+ breakout point, which not once tested VWAP close to the breakout level. When something as strong and well-defined sets up like this and price action confirms it along with volume, that's what you want to see. You want to see price move away from that breakout point very quickly without retesting it, pulling back, breaking back below VWAP. That's definitely not what you want to see. You want to see price explode straight through that level and hold firmly above it, giving you a high low across 1 minute, 5 minute time frames, showing you that there is steadily growing demand intraday. Now I can obviously go on with further examples and setups of how price action really rules many decisions surrounding the very various strategies and setups that I have. But for now, I'm just going to leave you with those 4. And I really hope you enjoyed this video. And if you'd like to take a deeper dive and look into real trades and examples on a weekly basis with me and other traders on the desk, then head over to Inside Access, where I myself and many other traders on the desk hold weekly meetings.